Hello, and thank you very much for joining us at our very pre-PDAC conference here. We're lucky here to have Giyani Metals and George Donne, who's the VP of Corporate Development, to talk about a pure play manganese project in Botswana that I think that everybody should be paying attention to, with EV craze ramping up and consistently being in the news. There's not many ways to play the manganese market, and this is the one that that you're going to want to pay attention and have on the docket. So without further ado, I'll pass it over to you, George, to tell us why it should be part of their portfolio.
Thanks very much, Seb, and good morning to everybody. Good afternoon. So Seb said I'm the VP of Business Development for Giyani Metals. Giyani is developing a small portfolio of high-grade manganese projects in southern Botswana, which is very close to the border with South Africa. And we're a feasibility stage company, so we're looking to complete our feasibility in the first half of this year. We are listed on the TSXV, and we are looking to be a battery company. So to sort of skip ahead in terms of the executive summary, why is it that we're doing what we're doing and what are we doing? Well, we're looking to be a producer of high purity manganese sulfate monohydrate, or HPMSM. So HPMSM is a battery chemical. So for anyone who's familiar with lithium-ion batteries in electric vehicles, you'll understand that the cathodes usually contain a number of different elements, nickel and cobalt being two of the leading ones, along with the lithium electrolyte. And for anyone who sort of has looked at that space will sort of probably recognize the acronym NMC or NCM, and that's nickel, manganese, cobalt. So just as nickel and cobalt are absolutely critical for the lithium-ion cathode production, manganese is also critical in the production of those cathodes. And manganese is a very well distributed commodity. It's heavily mined. It's a major input into the steel industry, but the battery grade section of it is very, very small. Probably less than 1% of all of the manganese that's mined in the world currently goes into the production of battery grade materials. And like all of the battery market at the moment for these kind of raw materials, demand is set to rise exponentially over the coming years as the EV market expands and the battery demand increases, and capacity for production of high purity manganese sulfate is heavily constrained, and around 90% of current supply comes out of China. So for a lot of battery manufacturers and EV producers, that creates its own issues. So obviously that you have concerns about sustainability and environmental compliance and how you can do that when you're typically served by Chinese traders, but also just the general view of diversification and not wanting to be too supplied too heavily or in too concentrated a fashion by a single jurisdiction or a single group of suppliers. So there is clear demand to diversify production of high purity manganese sulfate away from China. And to do that at the moment, you have very, very few options. There are one or two Asian battery manufacturers who take a form of electrolytic manganese metal and produce sulfate from it. And there is only one other company outside of China that is actually mining ore and producing high purity sulfate from it. So our objective of Giyani is to become a low carbon sustainable producer of this critical battery material. And if we're successful, we will be the second such company in the world outside of China that is capable of mining its own ore and producing a battery grade chemical to feed the EV market. As I said, we're currently at feasibility stage for our flagship K.HILL project. And we are looking basically to move ahead from our PEA that was completed in April 2021. And you can see that this is a particularly lucrative project. The IRR from SRK's independent PEA study was around about 80% post-tax, with an NPV post-tax of about 440 million Canadian dollars, and that against a very low project capex of about $160 million. So it's not a high tonnage mining prospect, but it is a very high value product. So our initial mine plan and development plan is to produce around 120,000 tons a year of high purity manganese sulfate, and that's with a throughput of about 200,000 tons of ore. So not a large operation at all. And what is important to look at, and where we will go sort of through the presentation, is that PEA and those economics were based around what at the time was a very small part of our resource, which had actually been delineated at that point. So since that report was written in April of last year, we've done some quite significant exploration around the K.HILL project and also into one of our other main prospects. And in conjunction with the feasibility, which is focused as much around the processing as it is around the mining, we're seeing the resource inventory building. And where we're hoping that will take us is that it will be to a point where the life of mine is sufficient that we can look at actually upgrading our production capacity over time. So moving from being a 120,000 ton product producer to being maybe a 200, 300,000 ton product producer. And because so much of the value is embedded within the processing plant and the IP around how you actually produce this high purity chemical, being able to upgrade the plant capacity has a significant effect on value. So to just reflect a little bit about the market and why we are looking specifically at the battery segment for manganese. So the numbers that you see here were provided to us by Benchmark Mineral Intelligence, who are one of the few companies that actually cover the battery manganese sector. And these were from about 2020. So I think we can look at these and say that they're probably conservative now. But as I said, the manganese industry in general is probably about somewhere around about 15 to 20 million tons a year. But in terms of the actual production of lithium, in the actual production of battery grade manganese, the current production is around about 30 to 40,000 tons of metal equivalent per year. And most of that is being consumed in the NMC battery industry. So, we're going to see two forces which are going to be driving manganese demand over the next decade, to 2 decades. First of all, there's the general drive for EVs, and this is being very much driven by regulatory pressures on, on automotive companies and the demands for decarbonisation. But there will also be a secondary drive, which will be the actual nature of the battery themselves and the cathodes that are going to be used in those batteries. So manganese forms part of the NMC chemistry, which is currently the predominant chemistry used in the world at the moment. But obviously there are concerns around rising raw material prices, sustainable production of those raw materials, which is starting to move a lot of the primary end users towards looking at how they can actually lower their nickel and cobalt components and thereby increase their manganese component. So nickel and cobalt have seen quite significant price rises over the last year to 18 months. And it should be, the reference price when looking at sort of the overall battery cost. Nickel, we're currently probably around about $23,000, $25,000 a ton at the moment. Cobalt even higher. Manganese, the market price at the moment for high purity manganese, even though it's doubled over the last year, is still only around about not even $2,000 a ton. So the manganese part of the cathode can be increased quite significantly without having a huge price impact on the battery itself. But also there are concerns, of course, about sustainability of these raw materials, and cobalt in particular. The battery makers and the car manufacturers see the concerns around sustainable cobalt supply and how they can essentially reduce their cobalt or even eliminate their cobalt component. But to do that, you typically need a higher concentration of manganese then to manage the nickel, which is the most energy dense part of it. So what we've seen is a lot of auto companies and indeed battery companies talk about high manganese concentration batteries. So manganese rich batteries. And so this, if these do start to come into the chain, it's likely to be towards the end of kind of 2030, that kind of time frame. But we're hearing, from companies like BASF, from VW, from Esvolt, one of the new gigafactory manufacturers in Europe, that this is the direction that they're looking to go in. So for their mass market vehicles that don't demand the ultra high performance, a manganese-rich cathode makes an awful lot of sense in terms of sustainability, in terms of price, and in terms of performance. So this is a secondary factor as to why we think the manganese industry in particular is going to see some very significant demand rises over the next sort of 10 to 20 years. And why our project in particular would be of interest to the consumers. It is very much being policy driven in terms of not just the movement towards EVs, but also where the raw materials supply chains are being managed and how those are going to be managed by the end users. So the onus is being very much put on the auto manufacturers to look after the supply chains, to make sure price, make sure sustainability and responsibility are enforced all the way down through to the mine level. And the issues that they have around products like high purity manganese sulfate is that when China dominates so much of the processing technology and the production, they find it very, very difficult to be able to do that. So being able to transact with a company like Giyani, who are obviously fully transparent, we're publicly listed, we're operating outside of China, we're operating in one of the best jurisdictions, for mining that there are, with very, very strong levels of governance. We are an ideal supplier to them. And our positioning, of course, being in Southern Africa, we can go in both directions. We can go east and we can serve the Asian market, we can go west and we can serve the US and EU markets as well. So we are a very good fit for companies looking at putting us in their supply chain. And what it enforces for us is the importance of environmental, social and governance principles within what we do. It has been put to us by many of the potential off-takers that our sustainability practices have to be absolutely paramount and robust in order to fit into their supply chains. So this is something that we take very, very seriously. I've got a little photo there of the first one. The first hybrid car to be directly delivered into Botswana was delivered by Giyani, and that is our company car out there. And we work very, very closely with both the social representatives and the government representatives in terms of developing the project. And we're very lucky that Botswana has such a rich history of mining and a strong legacy of working with foreign companies, that they understand the pressures on small companies to develop projects. They have a very, very clear system of mine licensing, environmental permitting, and the standard of governance there is very, very high. So we are able to implement all of our environmental and our governance management plans in conjunction with the local government. And it means that we are then going to be, again, very attractive for an end user who is looking for a sustainable source of a critical mineral component. Why is our project particularly conducive to battery manufacture as opposed to a lot of others? Bearing in mind that we're in Southern Africa, and South Africa is the largest producer of manganese in the world. A lot of it comes down to logistics and positioning. So we are a mining company, but we're also a chemicals and processing company as well. So to be able to go through the processing, which I'll explain sort of further on, you need access to a lot of reagents, a lot of power, a lot of water, which a lot of the remote areas of the Kalahari manganese belt do not have. As you can see from where we are located, we're very, very close to the South African border. All of our projects are intersected by tarmac road, high quality tarmac road. We have water, we have power, and it means that both from bringing reagents and bringing critical inputs in to our project, we're extremely well served both through South Africa, through Namibia, but also taking our product out. We are able to ship down to Richards Bay, Durban, Walvis Bay, and Namibia. We have these various options, and so it becomes very cost effective for us to be able to operate in a country like Botswana. having a quick look at, I don't want to dwell too much on the economics of the project. I see Seb has appeared, which means I've nearly worked out my time, but I'll say that the economics that you can see there were based on a very, very small mine life of only sort of around about 8-9 years. And so I'll skip ahead into looking at the resource here. When we started the PEA, it was only about 1.7 million tons. With the exploration work that we've done over 2021, you'll see that our resource inventory has increased to 5.2 million tons. So we've significantly increased our mine life, and that has been the indicated numbers there of 2 million tons plus is now being put into the feasibility study. But it means that we still have an awful lot of exploration still to come up into the mine plan. So this project only has the potential of getting bigger. You can see here where, in terms of where we've actually explored, so the red and yellow dots that you see in concentration there, the main K.HILL ore body. Down there is to the south, the southern extension that we've been able to increase, and we have a secondary deposit, which is Otse, which is off, you can see to the right, which should be a lot of high-grade feed that can come in. But I'm aware that Seb is probably looking to ask me a few questions. I'll just say a final thing in terms of where we are in the processing, because it is a very process-heavy situation that we're in. We are at the moment completing the final metallurgical test work, which will allow us to complete our operational flow sheet. We have done most of the parts here you see on this process sheet. We're just at the re-establishing the polishing and crystallization stage that you see there right at the end. This test work should be completed imminently, and then at that point we are going to be able to complete the flow sheet, finalize the feasibility study, which we're aiming to put out as soon as we can, and then we're also looking to build a demonstration plant which will allow us to send samples off to customers, which obviously is a critical part of what we're looking to do. But apologies, I think I've overrun slightly, so I'll see if Seb wants to ask any questions.
Yeah, sure. Thanks, George. That was a great overview. There are some questions that have come into the chat box here, and the first one is, are you able to go and tell the manganese message? It seems that individuals are more understanding of lithium and cobalt, but less so of manganese.
Yes, it's a difficult one because manganese doesn't get covered, and I think there are probably two reasons for that. First of all, I think people just assume that there's an awful lot of manganese in the world, and therefore it won't be a problem. And we see that repeated a lot, and it is absolutely not the case. That there is an awful lot of manganese in the world. That's true. It is not battery quality, and it does not go into the battery industry. You can't put manganese rock into a battery. The battery segment of the industry is tiny, less than 1%. And that part of the industry is constrained and is, struggling to meet demand at the moment. So there is ample demand for it, but it is not well covered. And I think another issue that comes about it is that unlike cobalt and nickel and lithium, where we're starting to see, sort of publicly accessible reference prices, so everybody can see the price going up and everybody can see, therefore, the squeeze on supply. There aren't many accessible price points for high purity sulfate. There are one or two, and for people who could see them, you can see that the price has more than doubled in the last 12 months. But because most of the commentators don't have access to that, they can't see the squeeze that's coming.
And maybe just one more quickly, can you name some of the auto manufacturers that are moving towards manganese-rich batteries?
So, I mean, to be honest, most of the major auto companies are using NMC cathode batteries in some format. So Tesla, VW, Stellantis, pretty much everybody out there is using NMC. They don't get used in China so much. You have a lot of LFP in China. But when you look at, for example, if you were to look at Stellantis and you were to look at VW's case studies, they do talk about the move towards low cobalt, high manganese rich cathodes as being their future. And we're not allowed to say who, but we do have a data and product sharing agreement with a major OEM in place at the moment where we actually are looking at supplying them with test formulations of our product for them to run through their processes. Now, that they are a major automotive company, a multi-billion-dollar company. Why would they be dealing with a company like Giyani at the stage that we're at? And the answer is because they can see the problem. They have looked ahead at the supply chain. They know that trying to get sources of this kind of material, particularly diversified away from China, are incredibly limited. And so they are very keen to engage with companies, even of our size and of our stage, to make sure that they get that security of supply.
Well, maybe we'll leave it there. Stay tuned. Keep an eye on Giyani. If you don't own it already, put it on your watch list. There's lots of news that's going to be coming down the pipeline. And we thank you, George, for joining us today. If you have any further questions, please feel free to reach out to either George or myself, and we'll get any questions answered for you.
Thank you very much, Seb. It's a pleasure being here. Thank you.
Thank you, George.